Pretty busy this evening. I had to be out of the office much of the day, so we've continued with a kind of a position trade. Little unusual for us to be doing this. Usually, we're much more active intraday. We were asked by a caller today, as ordinarily you're holding, futures for hours. Um, we're diversified in what we do. Um, Normally, we're, much more active intraday, but we think the markets are presenting something really, really unique. And there's a time to be, maybe a little more patient. We're short these markets. We're continuing to short them with options going out to the end of March, and we've been doing so really since in a big way since well, not this past Sunday, but the Sunday before. Those of you that are kind of keeping a score, we started with a beginning balance on Sunday, January 26th of about 30,000, right at 30. And we closed, we were at Friday, we were at about 35, little over 35, 5,000 for the week, um, which is just fine for our goal, and but well off of the highs that we had. So we probably should have maybe done better for last week. And so we continued though. We held that position into Sunday evening, and we are where we are. So we our beginning balance on Sunday of this week when the markets open, we were at 35,294, and we're currently at 41,000. So once again, we're up about 5,000, and for our weekly goal, that's just fine. So we're gonna play it a little more patient here. We do think the markets are headed back down. Now, there's a lot of noise that always is on sell-offs, right? There's always, last Sunday it was remember the story about, oh, it was the Chinese AI company, right? And then this weekend it was, all about the tariffs, yada, yada, yada. And of course, and then the rally this morning was, oh, it was a direct result of, that Trump suspended, the tariff talk, or, for 30 days at Mexico. Folks, you can believe what you want to believe, and you can get caught up on all that. And I think you'll find it very, very frustrating. It'll drive you to drink. That sort of thing is just not tradable. Um, Trump is going to be in the news every day from here on out. I mean, and he's going to be moving things this way and that way. So he thinks, or so the fake media thinks. That just doesn't matter to us. It just doesn't. You'll do yourself better, if you want to watch that stuff and listen to that stuff, maybe do it after hours or something, but you'd be better off getting the TV out of your out of your office, get off the Reddits, get off the Discords. I was also asked earlier this evening too, do we run a trading room, right? No, we don't, right? And we've been doing this, and I just want to point out, we haven't been doing this for 6 months, 6 years. We've been doing this for 20 something years, more before Twitter, right? So, and we were doing it, Susan and I, on our own. And then, Stock Market Caddy came out of the ground around 2012, right about the same time, I think, when Twitter started to come out. One of the reasons why we don't do trading rooms is I went into some of those like in the 2000s, and I hated it. I thought it was ridiculous. I thought it was childish. You sit there and listen to some guy, pointing to a candle on this and a line on that and this moving average, yay, 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 we bought. And I just thought it was ridiculous. So I never, never wanted to do that to anybody. Um, when we founded Stock Market Caddy, I said the only way we're going to do this, Susan, is we need to be prepared to share our experiences with everyone. We need to be prepared to share the programs with everyone. And we need to be able to give them the education so that they can do this themselves. I do not want people dependent on me to buy or sell anything. I want them to learn so that they can make their own decisions. That was the cornerstone to what we're doing. And that is far, far different from everything else that's out there. It just is. Um, so any case, it when I think back, when we started this, and Susan said to me, Don, I'm okay that if you do this. And one of the reasons why we did it, Stock Market Caddy, was just that our trading was so damn boring. It's very, very boring the way we do this. It's not even if we were actively, it's not that active unless the machine has, been set up to trade really, really active. But all Susan said was, Don, you can do this with the provision two provisions. One, the stock market caddy is going to have to be after a period of 6 months, 8 months. I mean, she's a business person that it has to be operating in the black. Doesn't have to. It wasn't. We didn't expect that stock market caddy, and we still don't. I mean, we're not out advertising the heck out of what we're doing. We're not trying to get thousands and thousands of we're not. It's very small. It's a small private club, but it has to be in the black, in which it very, well within what Susan had said is operated within the black. So we met that criteria. But the other piece was Susan said to me, but Don, it can't take away from our own trading. And now she wasn't concerned about one of the concerns that I had one time in the early 2000s was that, I had it in my mind that if somebody had a profitable approach, why would they share that approach? Because if they shared that approach, then everybody would be doing that approach and then they wouldn't be profitable anymore. And that, um, the reality, and I'm gonna put myself in this, when I think back to my younger self at that time was I didn't know what I didn't know. I didn't know and understand how deep the markets were. I didn't understand, the many different inputs and variables that a person can put on. So we have so much available for the membership that we have. There's so many different ways. Even with Swing Machine, you see a pretty standard view here. And this isn't actually our standard view. Our standard view is 135 or 1 minute, 3 minute, 5 minute. But even if members are looking at exactly the same, there's so many different things that they could be doing at the same time. So studies have been done that it takes 100 contracts to move during normal session hours to move the ES like one tick, 100. So we're not stepping on each other. But the other piece that when we did Stock Market Caddy that I didn't anticipate, I didn't, and Susan didn't anticipate, and I don't know, I just thought everything was going to be flowing out, but that wasn't the case. What happened was, as members joined, things started flowing our way too. Um, our members have all different experiences, all different backgrounds, software engineers, salespeople, pilots, electricians, policemen, all kinds of backgrounds, all kinds, executives, dare I say, a mayor, um, all kinds of backgrounds and all different educations and experiences. And when they join, um, and certainly as we go through the Q school with them, those folks, we learn a lot. And they ask very thought-provoking questions as we go. So a lot of these tools, don't want everyone to think that all of the tools come from just Susan and I. They don't. A number of the tools come from members that have joined over the years and asked for this or asked for that, and we program them to do it. And why do we program? We do it so that it can be repetitive, right? So I know what you want to see though. You want to see a chart, don't you? Um, the beautiful thing about these radars is that you can kind of get away from charts, right? I mean, if you still want to have a chart, I mean, you can have all kinds of charts. So we're talking to a gentleman today. Do we use point and figure? Yeah, absolutely, we do, in a number of different ways. But we also use other charts too. And let's go look at that Renko chart. And let me see if I can widen this out here a little bit, right? So this is not much has really changed. I know many of you may have been like, wow, it's gonna do it again. And I know what you're thinking. But now this is a slowed down, a slowed down Rinko, right? This is $1,000 a brick. $1,000. So this is would be mimicking a daily view, right? So this is slow. This isn't meant to be trading intraday, right? And we will use this view, um, and why I like to show it, because we'll use it with our options, right? So we like to get our options on up at resistance levels, right? Take it down. We like to get our bearish options, and we like to get our bullish options down off of support. Now, um, could have certainly hedged those a little bit today, but this is I'll just share with you what we see here tonight. Um, First thing is, this is right here. I'm getting a marker here. Um, Maybe I should just do it in yellow. So this tool here, do you see that? You might favor the short side. That is an algo in and of itself. And it is hey Don, it's Scott Z. I'm here listening to your great insight on the topic. So how did you and your wife come up with the caddy? What causes your application to flip from bullish to bearish? Well, I'm happy to answer that, and I'll come back to it, Scotty. But when you say like how does we have multiple, right? So it depends on what you're trying to do, right? So we have a number of different tools. This one here, this is an algo that is running, interpreting the price action on this Renko chart, and it'll actually change. So I don't type that in. The program types it in. Yeah, he still remembers I know. I'm sorry. When you said that last night, Scotty, I'm like, what is that guy talking about? Killing his family member. I'm like, is he smoking weed or something? That I totally forgot what I had asked. Yeah. Um, but so this it will say you might favor the short side. You might favor the long side. So I just don't want you to think I'm printing that. The machine will also print distribution underway. It'll also print accumulation underway. And it's even got a third category up here, and it'll say um, profit zone. So if you are short or long, it'll know that, and it'll suggest a profit zone. So I want you to know I'm not putting those things in. Um, Now, this was this was last week, right? So on Sunday of last Sunday, Sunday before, back on the 26th, we got that big rundown. Remember that? And everyone got short in the morning, and that was over the AI. China was taking over the AI, and they had a company that, only, invested $5 or $10 million and did everything that NVIDIA. That was the story, right? And it was total bullshit. But it got everybody excited. And I think sometimes they set these constructs up, maybe, maybe. But um, so then we rally, and we did that, and then, and I did think that we were going to say goodbye to that at that point. I think I shared that with everybody. And on a position basis, we got in here at a short, and I decided to kind of draw it down. And on Friday morning, or actually late Thursday, I had to kill it, protect our 5,000 for the week. That was put the account at like 35,000 thereabouts. But then we got this move a little bit down on Friday. And then the swing machine started selling down. And then and we said on Friday afternoon, you know what? This has got the same shape and look as it did last week. I wonder what the story will be this weekend, right? I think we actually said that. And and then sure enough, another new story, another new narrative, the king and the queen story, and they get another one, and down we go. And then we even said, I think, even last night I said, wonder what they'll do. Do they, we get some panic. I said, be careful if you get down in here in the morning and you get short in the hole for the very first time, right? And then, get your head ripped off. And then, we rallied right back up. So now comes the question, well, what are we doing from here, Don? Are we, are we simply going to do what we did over here? Are we going to just simply pull back and then leg and go back up to the old high and just keep on rocking and rolling? Maybe, maybe, or, and by the way, let me just remove this. If you count the number of bricks, and we can do this by machine too, we can actually count these, but one, two, three, four, five, six, seven, eight, there's nine of them, right? So we have a program that'll actually count these bricks for you and actually put numbers in there and the whole nine yards. But so then we counter back up. We come one, two, three, four, five. So where are we? Without even putting on a Fibonacci, we're at about 50%, 0.61, thereabouts, retracement right back up. Now, there's a couple of things that have me still thinking very patiently that we are headed back down and we're going to take this out. And what is it? Well, one is we did this once already, and then we counted back up. But when we did come down, what this past time, and I know, Mexico got a delay and all that, but I don't care about those narratives. So I don't really, on the other side of it, there could be another story that we're not yet aware of, right? It could be something, if it is a story, right? So we don't even bother. But the fact that we came down and we took out all these swings is very, very noteworthy. And that we came down with such a vengeance and we did it a second time. Now the fact that we counter back up, um, I think it's a tall order to try to repeat that from last week. I just do. And the other part is this program is telling us that we favor the short side. This one is. And then we have other programs. And let me show you one of them. Now, this one is hard for you maybe to appreciate, but we have a program. Let me describe to you what it does. Um, it runs on a daily chart of the VIX, the ES, the four major indices. The ES, namely sorry, you created parameters that recognize the flip itself. Yeah, what is the main indicator? Does the caddy see? Is it volume or price action? Yeah, it's not volume, right? So we don't use volume. There's a number of ways that the price action can be taken apart. I mean, there's an infinite number of ways to look at it. Um, so, but let me share with you something that you may not be familiar with. This, I'm going to go here in a minute. We'll go right here. Do you see this? Let me eliminate. This is what we call the Nicholas timing tool. You see that Nicholas timing tool? But do you see these guys here? These are all the Russell, the NQ, the Dow, and the ES. And it's called the Nicholas timing tool. This is another one of our algos. And this one we lead off with every night. And as a monthly member, you get to see this every night. And we have swing traders that push off of this in a big way, in a number of ways they do it. Some will use, mini contracts, some will use multiple contracts, some will use micros, and some will use options. And every time Nicholas gets in what we call a confirmed long or a confirmed short, um, they will get their options on. It's remarkable. Now, this model goes all the way back. When we developed this model, we tested it all the way back to 2000. Between the years of 2000 and 2008, it sucked eggs. It was terrible. But from 2008 to today, it does very, very well. Now, we didn't have it in 2008. We developed this, I want to say 2016 or so. It was around 2016, 2017. And I can tell you how the model works. Let me get a darker pen. It takes, we have on a chart, for instance, now when we first did it, we had the ES. And on a chart, there's the a data stream of the ES, data stream number one. And then there's a second data stream flowing into the chart. And what is that stream? It's the VIX futures, the VIX futures. And then we have a third data stream. And what is that? It is the yield on the 10-year treasury. And that goes into a mathematical 10-year yield interest rate. And that goes into a mathematical algorithm and it generates daily buy and sell signals. And we wrote this because what we were seeing and what we believed was that the Fed was controlling the markets, not so much the S&P, but they were controlling volatility and the markets were being controlled. I think someone the other night used that word and I'm like, yeah, they are being controlled. And what are they using? Well, they're using VIX. In our view, we can see it and interest rates. So when we wrote the formula, um, we had this idea. Susan is very, very good at math. Susan is confirmed from IBM as Mensa. She's a very, very smart girl with math. We write the mathematical model and it tested out really well. I'm like, huh, I wonder, I wonder if it would work on the NASDAQ. And it did. I wonder if it would work on the YM. It did. And I wonder if it would work on the Russell. It did, but not as well. But the other three really, really well, particularly the ES and the NASDAQ. And the signals were all virtually around the same time frame. They all more or less go together. Then the other piece that we did, so we did all this testing on all of these, and then we built an algorithm just for the VIX. And what we want to do is we want to confirm these signals with the VIX to go in the opposite direction of the VIX, with the VIX going in the opposite direction. So this is exactly what happened the other night. And one of the reasons why we're still leaning short and everyone else might have been bullish on today's, like, thinking, oh, we got a red dog reversal candle. Not so fast. So we'll see, we'll see how it plays out. I'm not, we're not trying to be right or anything here. We're just trying to share with you. So we have the Russell short, we have the NQ short, we have the YM short, and we have the ES short. And we have the VIX long. So what that means, and that was back on the 31st. On the 31st. That was at the close of business on Friday. And it's still there, despite the bullshit that went on today. It's still there. So that'll give us when Nicholas is in a confirmed short mode. Now that doesn't mean, please, and I don't know the level of experience here at traders, like, because, tomorrow could be another barn burner of a rally. I mean, it could be. We're not, I had one person call one time and they said, Don, I just want to know what's going to happen tomorrow. Do you have one system that can tell me what'll happen tomorrow? Um, you know, we're really good, but nobody's going to be able to tell you exactly what's going to happen on one interval, one day, one 5-minute segment, one hour. That's a little bit of a reach. Um, so, and even in bearish phases, we can get, these vicious rallies. And that's why we like to trade intraday too, because we can be longer term or midterm bearish and short using options, and then intraday, you know, you know, take advantage of a bull run. I mean, we can do that all the time. But what I wanted to point out to you is how this happens. Um, and our members know this now. I mean, they've been watching this now for years, but they all go together. Now Jim Cramer would have you believe, I'm trying to write a hard to do with a mouse, but this is a market of stocks. It's a market of stocks. It's, you got to be a stock picker. Peter Lynch, I'm seeing all the Peter Lynch old video. You got to be a stock picker. Happy to discuss that one day too. But um, why does it do that? Why do they all go like virtually within a day or so? The reason why they do that, and they've been doing this for decades, the markets have been commoditized. Commoditized. That means that, here you have the Russell 2000 stocks, you have the NASDAQ, you have the Dow, you have the ES, but yet they all go on the same day. And they will do this over and over again, one way or the other. They'll go within 1 or 2 days of each other. And there are some conditions we will get. There's a situation. I don't want to get too close to this, but and the chances of you writing this is like slim and none, right? There's no way. So I'm not worried. We have members like, don't tell anybody on YouTube. Don't tell them. Don't tell them. The likelihood that you're going to write it is just not possible. It just isn't. There's quite a few lines of code, but um, we can see a situation where if we are all short the market and the VIX is short, then we're not in a confirmed short. It's a yellow caution. And let's see, CNBC is a commercialized pre-written joke or show. Yeah, I haven't. Yeah, don't watch it. Don't even. I don't watch any of that. Back in the early 2000s, people did in the late 90s. Don't watch it. You'd be better off just listening to music or books or the Home Shopping Network. Don't even bother. Um, but so we'll see. We'll see how this plays out. One of the huge trades. Now, when this goes here, and we don't. This isn't a trending strategy or anything of the sort. What it is it's what we refer to it, how we describe it as market vibration. It really does pick up the market vibrations, and it's remarkable. I just don't know how long it's going to be. We don't know. We'd have to go to maybe other things, and you could go afterwards and look at a chart if you want, or do other things. We can look at the model to get an idea of how long they can last. But I'll describe this to everybody, and we may have members listening, and so I can't bullshit because they're listening or they know and they lived it. And but remember when COVID was going down? Well, we knew about COVID in January of that year, and I'm losing track of the year. Was it 2020 or 2021? I think. But I just tell you the story about COVID and Nicholas. And so we were all reading, as you were too, in early January about all the carbon monoxide stuff and all the bodies being burned in China. And I'm like, I think this is going to be a real deal. I mean, I was even telling my family up in New England, get masks and all that stuff. Really, I said, I think it's going to be a really good, big deal. But the thing of it is, the market was running. If you remember, it kept running. And Trump was president, and it kept running all of January. It got to be the end of January. I'm like, man, I don't know, guys. I mean, and we were just playing it to the long side because we just play what's there. You talk about a narrative. I mean, we all knew it. I said, if this really comes to pass, but I'm like, well, maybe it isn't. Maybe it's a big nothing because the market was long and Nicholas was long, really long. And he had been long for weeks and weeks, like going back to like October and November the year before, and it just continued. And we all knew about it. And then in early February, we definitely knew that, hey, this thing's going to be a problem. Market didn't care. Market was still long. And then on February 24th, I'm thinking, you know what? I don't know. I think this COVID deal is going to be important, but you know what? The market doesn't really care. And, hey, Nicholas is still long, everything's still long. But then on February 24th, out of nowhere, Nicholas fires short all four markets in the VIX long. 3 weeks later, and we took it. We did it with options. We did it, everybody did it. I'm like, I think this is it. We don't know. 3 weeks later, if you had taken the VIX long and all four markets, Nicholas had his high water mark in 3 weeks. He was up 260 grand. Did we get it all? No, no, we didn't get it all. Do we have members that got it all? Um, I don't think they got it all, but they got a good chunk. They got a good chunk. Um, and then he flipped out. So we never really know. And I'm sharing it with you tonight because you know something? I don't know. Whenever these signals come through, and I'm not suggesting you do anything, I don't think you should, because our members know, he can get them wrong and he will flip out. I mean, if you're a monthly member, you're going to see it. But if you're not, you know, I mean, it could flip out tomorrow. It could caution and go the other way and you won't know. So don't go doing anything with your money based on anything that you hear from us or from anybody. I mean, we're just showing you an idea, but and also how sophisticated this tool is, and it's really pretty sweet. So when when the market was rallying this morning, were we distressed? Were we frustrated? Were we? No, 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 no. Um, and we'll see how it plays out. But this is just one of the tools. Monthly monthly members get to see this signal every night. It doesn't change from day to day. Sometimes it does, but usually it doesn't. But I don't know how long it's going to be there. Um, Let me erase these and I'll go and read those questions or comments and just kind of erase the from Zoom. It's a beautiful tool. Um, let's see. It's amazing how silly news makes the market get so scared or overreact. I see. I don't. Um, you know, they want to personify the market. They want to make the market. The market. The market thinks this. The market thinks that. No, it's just. Um, you know, there's millions of participants. So I don't personify the market that the market thing. The market doesn't move as fast as you would think. And the market isn't as smart as you would think too. The market is right, I guess. The market is the market, but it isn't necessarily the smartest. Um, the smartest money is in my view is the bond market. It's much bigger than the stock market, and it's much longer money, and it's usually the smartest money. In fact, I have a sign in my office to remind me of that, is that if there's ever a conflict or a choice between the two, I'm gonna take heed to the bond market versus the stock market, especially that over the Nasdaq. CNBC is a commercialized, pre-written joke. Yeah, I totally agree. And I did have a question about the numbers on your chart after it says trending up or trending down, 1 to 6. What do those numbers mean? Thanks, Don. Great info. I think you're back over here, so let's go look at it. I think what numbers mean. Let's come back over here, that Renko chart. Um, where are we? I think it was this one. These numbers over here. I don't see your numbers. Are these numbers? I'm not sure what numbers. I did have a question about the numbers in your chart after it says trending up or trending down. Um, I'm not sure what you're referring to, but So we're gonna just erase that little marker there too. So we'll see. We'll go back to the intraday view. And here's our little, our 5 minutes so we get a view on this. Um, and so again, over the last 2 weeks, because of the very unusual sell-off that we had both last Sunday and into Monday, and we were fortunate to catch a big chunk of that. So we got our week's objective done. We decided to slow our trading down and to see if we could, be there for for a bigger move. Last week we didn't get it. Nobody did. The market counted, and we had a very fine week, over 5 grand for the week. Once again, we got ourselves in position once again to um and we were in position to get that positive outlier. And I know what you're saying on the radar. Yeah, I'll show you. Um and once again, our weekly objective has been achieved here. If we were to stop right now, my weekly objective for the week on this one market has been achieved. But because it's so early in the week, and because Nicholas is short, and because of other things that we see and other tools, we think that we're not going to counter back up again this week. We don't think so. We think we're going to revisit those lows, and we think they're going to get taken out. We'll see. Now, one of the things that could have been taking place here today, and we told our members this, and I'll just share this with you. It's February 3rd. It's the beginning of February. There's an old strategy that you can look this up, but the game is to buy the S&P futures um, on either late Thursday or Friday and turn around and sell them on Monday, because Monday is mutual fund Monday. That's when all the workers are putting in money into the mutual funds. And so that's what they would do. And then they'd sell it. That's why you would have, mutual markets run up on Monday, mutual fund Mondays. And then on Tuesdays, they'd turn around and go the other way, turn around Tuesdays. Um, there's still some of that. The other piece to it is, though, at the beginning of a month, they're more apt to do it too. So we were on a Monday, and it is February 3rd. So I think we're going to see, um, may come tonight, in the wee hours, we may gap down again, but it more than likely, we're going to get a really good view, um, probably toward tomorrow's close. And, we probably won't be live on YouTube, but if the market is slowing down, and I survive, the night with this position, which I think we're going to be just fine, um, rest assured we'll still be short. And we still have our options, all the way out to the end of March. So, um, and I still think that we could revisit the lows and maybe take them out. And when we do, if we do, and we do have, so when the market does, when it does break, if we get that break, and it does, the retail crowd, that's when they're going to go short, and that's when we're actually going to buy and close our positions and begin to close our positions. So it's just the way it works. But we'll see. We'll see how that plays out. What you're asking is, what these numbers mean. The swing machine is an algo in and of itself. It is not our first algo. The first algo is what we call the Pebble. Um, this one. Where is it? If you like to trade stocks and options, and if you're not trading, if you're trading futures, you're not trading options, I think you should. If you are trading options, you're not trading futures, I think you should trade futures too. I think you should be diversified in what you can do. They really go hand in hand. I mean, why wouldn't you? I mean, you're doing more or less the same thing. One market's open when another isn't, and so I'm looking down here. Here it is. Here's the Pebble. So here, check this out. All these signals here. This is the S&P 500. These are all signals today. Today, IDEX. And this purse reflects a $10,000 trade. Now, it's not I don't suggest people trade like that because you're using too much capital. It's not capital efficient, but the signals are the signals, and you could be using options and be doing much, much better. But let's see, let's just scroll down. There were 32 because we had a label row, 32 signals, and we're profitable in all but two. This, this Pebble Beach, the Pebble Beach triggers, this was the first algo that we used in a big way in the early 2000s. And we were trading stock and trading options. And I was doing it manually. And we share with our members during um, Q School, how it's put together. It's really, really good code. But we then came to trading futures in a big way. We didn't always, right? We didn't. We weren't in the 90s, but we were in the 2000s, and that led to Swing Machine. And bring you over. Here is no, go back. Here is the intraday. Here's Swing Machine. So again, we can change the intervals, and the signal is coming from here, either short or long. There's a rip or a dip feature to it. Calculates this, gives you the number of bars. So this has been for the 5 minute has been. It's just shorthand, so we don't have to run over here and see the time. It does record the time, but it's easy for us to know 28 means 28 5 minute segments ago it went short. And if you took it with a micro, you're up, you know, 47 bucks. If you took it with a mini, you're up 475, and it was at 820, but that means 28 5 minute segments ago. So it's just shorthand. So this gives us the entry price, gives us the time, gives us the date. This is the trend information. The ball flight, this especially this portion here, is the most sensitive. So we can literally tell when the trailing stops are going off. Especially at this hour, it's pretty slow, right? The market is slow, it's thin. But during normal session hours, when everyone's playing, it's very, pretty efficient. Around the open, things can get rather frenetic, but you literally can see the buying and selling coming in. But this is where it'll come in first. But what we do is we also um, let me just do this. Just show everybody. There's a few folks here. Um, we've had this 5 minute view up now for the last few weeks, but our mainstay is to, and Tina was asking about this, who's watched this for months, um, add a blank row, add a blank row. We will put in the ESH 25, ESH 25. And this is what we'll teach our folks in Q School in those first couple of days. And we'll change these to a 1 minute, 3 minute, 5 minute. Now, members who have this on their desktop, they may change it to something else, and some may use actually a tick count, which is transactions. But what we're teaching folks to do is to trade the 1 minute, and to trade the 1 minute in the direction of the five. So if the 5 minute is short, only take 1 minute short. If the 5 minute is long, only take the 1 minute. And that keeps their risk pretty low, and it gets them accustomed to following a machine. And and then we watch them do it for a period of a few days, and we want to see what they can do, and they want to see what they can do. And then we ultimately, that is something that we can actually program, right? So anytime we ask somebody to try to do something, we can now program, the 1 minute to go short only if the 5 minute is short, or whatever the time is. Now we have some members who have been with us for years, and they have their own, like I say, their own intervals. Some people may want to rather than have, time, they may change it to, like I say, 500 ticks, which is actually 500 transactions. But it doesn't necessarily give you volume because a transaction could be five contracts or, um, you'd be surprised. You think that the hedge funds are trading like hundreds. They are trading hundreds of thousands of contracts, but they're not at one time. They do them in increments, small. But I'm gonna delete this for now and we'll just keep it simple because we've simplified this because we do think we're going to get a pretty nice correction in here, and we want to be here for it. Um, what else can I show you? Now, this is at here we have an options club selector, and we place our options, so we're kind of busy at the end of the day, right? You can call me anytime, but usually I won't take phone calls like from 3:15 to 4 because we're dealing with our options at that point. We're closing options off, we're putting options on. We don't put our options on at the beginning of the day. We put them on at the end of the day. We want to see as much of the market as we can. And we'll come here. This is called the options club selector. And this is a beautiful, beautiful tool. And you can put in whatever stocks you want in here. We have the S&P 500. You can, you can copy stocks from Swing Machine. You can have your own stocks or all pre-screened stocks for options. Um, and and what we'll do is we'll just come in here and it'll tell us. So for instance, FedEx, it's suggesting, I don't know what happened to FedEx, probably earnings or something today, but it's flat out suggesting a call. Um, don't take the trade, right? But you know, um, but and this one is microchip, and it's actually suggesting a put credit spread. And then here, this one, Oxy, is a call debit spread. So this program is is analyzing the options formula. And with options, you've got to get the price right, you got to get the timing right, and you got to get um, what did I say? Well, you got to get the strike right of the price. You got to get the direction right, ideally, but you also um, timing, but you also got to get the implied volatility right. And so we've written this program to consider how options are priced and to tell us what we should be looking at. Now, whether or not you don't have to do a call here. I mean, if you know how to do put credit spreads, I mean, you could, and you can get cute, and we do share our experiences, with options, but it is a beautiful tool. And then over here are all the um, on the dark side. And see, this is kind of interesting. See this, you see how there's a phantom vignette. So this is that Parker Hannifin. So Parker Hannifin, this would have been here suggesting a put, not tonight, would have been the day before. So it would have been what, Friday? So on the end of the day on Friday, this was suggesting a put on Parker Hannifin. And if you got the put, for 30, 35 days, you'd be a pretty happy camper today. Um, but this is where they come from. And then if you're comfortable with options, and then this also can give you iron condors. And here they are. These are the stocks that represent the best candidates for iron condor. Now you still need to have some experience with options about, where you're going to place them. And we do go into that during Q school. And we definitely have a very, very mechanical approach when it comes to options. Very, very mechanical. Um, we will come here. So the mistake that we think that people make with options is they go to their charts first and they pick them from there. We come here first, then go to the chart, and then go to the option and build the option out. As an example, we can also, oops, what did I just do there? Sorry. Um, we also have something here that called the options expected move radar. So this comes from the options. So we can tell you, I can just click on this. What is the expected move tomorrow? Who is expected to make the biggest move tomorrow? The SPY is expected to move about 12 bucks. Could be up, could be down, but that's I'm sorry, on the one day, $5, $6, five and a half bucks. That is what the options market is expecting the SPY to do tomorrow. Could be up five, could be down five. It's not giving you direction, but it's telling you how volatile it's going to be. The stocks who are going to be most volatile tomorrow are these. And you might want to shoot a picture of them and see how they do. It's telling you that Align is expected to move about 12 bucks. They might have earnings, coming out tomorrow. That's a pretty big move, 5%. And if you want to go out, you can plug in anything. But if you wanted to go out and you're doing your option work, and you say, well, geez, I want to know going out 15 days, who's going to make the biggest move. And it appears to be this Align. Align's got a lot of applied vol built into it. So we can come here. Maybe you're going to do something with covered calls. Maybe you want stocks that aren't going to make a big move over the next 15 days or over the next 30 days. Well, these are the stocks that aren't going to move. What is this? PP&L and Duke Energy, your utility companies going to be, dead in the water. But maybe you want that. Maybe you're selling covered calls or something. Um, Man, that still may not even be the best. But this is just to give you a glimpse of how we go about our business. And we're pretty active. We stay active, but we're not just, you know, and we're not trading just one market either, right? Um, but we do want to have an eye for what's going on, for the overall market. And then we want to see, like, this is Swing Machine on the VIX. So the 9-day spot VIX told us 6 days ago, get ready because the market's going to probably get a punch in the nose. That was 6 days ago. The 30-day is risk off. The 90-day is risk off, and the 6-month is risk off. Now, that doesn't mean that we're going to get a 6-month correction, but it could be. It's building, and we can see it. And I don't even need to look at a chart. I can see it right here. And the one that we put this down below because the one that's most important to us is the futures. And the daily is risk on pause. And it's hinting of a trend change and it's starting to come up. This will actually go risk off. When this bitch goes risk off, the market's going to get rocked. And it's been risk on for the last 2 weeks, even with the sell off of last week, even with the sell off overnight. But it's building and we can see it building. But we're not done. We'll come to the skew. And that's my cat. In the skew, we look at the skew on the SPX. You can look at skew on any number of things, but the skew, it is trending down, but the skew is still very, very high. And you can't hide that. And what that means is that the big money, they are selling calls to the speculators, and they are buying puts. Not a great timing tool, but it tells us how they're getting positioned, and they're on defense. They are definitely on defense. And the skew, back when we were up here and we were putting our options on up here, um, the skew was giving us a reading of 172. I've never even seen it that high. But that's what that means. When we correct and we come down, 20, 30%, the skew and then everyone will be buying puts, everyone will be fearful, and the skew will give us a reading of um, very, very low, probably below, like 115 or 110, and then we'll be buying, you can buy anything and everything at that point. By the way, when we put, and I can even put the VIX in here just to show you, um, what we're looking for when we go after a market call, we we have the S&P and then we have the VIX right here. We want to see, I can show you, and then I've got to get back to work, but um, we want to see the S&P on a daily basis. We want to see it. We have a euphoria box up here, but we want to see it way up here. I don't know why I'm not seeing the euphoria box. We want to see it way up here, and we want to see the the VIX down in here. So when we see the market in euphoria and we see the VIX in panic sell, we're going to do what? We're going to sell the market. When we see the S&P in panic sell and we see the VIX in euphoria, what are we going to do? We're going to close all our shorts and we're going to go long. We're going to do just the opposite. But that's on a daily signal. And we can do this without even looking at a chart. But we can still get the signal, know where we are, then go to a chart and look. If you got, if you got charts that you like to look at, we don't have a problem with that. We use them too, but we're not going to the chart first because you begin to see things that aren't there. You get vertigo, you get, start overreading candles, going. And by the way, candles, been around since like the 1970s. I don't think they're terribly helpful when it comes to futures. Okay, I'll let you watch. I've got to attend to some business here. We're still very much working. It's 10:45, but we'll let you watch. And if do the membership at 90 a month, does it include daily videos of you, updates on the trend, et cetera, considering the subscribe? Yeah, the base membership is the monthly. It's $100, $100 a month. If you're at all curious, I mean, um, you join for a month and see what you see. And but our retention is extremely high. When folks join for a month, our retention is like 90%. It's month to month because I know generally folks don't leave. Um, if you join on the monthly, though, you get a video view of all the algos every single night. You see where Nicholas is, you see where all it is, and that's what we do every night. Um, that If you have an interest in becoming an annual member, though, we will give every monthly member a 1 day hall pass, and we'll give you a private Zoom link. You got to schedule it with us. You got to let us know what day. We'll give you a 1 hour tour of everything, and then we'll let you watch the trading intraday and for the full day. You want to be able to watch it for a full day, and they give you an idea, and you get a chance to see it, and it's wild. It's really wild. So, in any case. Would love to have you. I mean, our members, they love what they do. They're very patient. They're very disciplined. Like I say, varied backgrounds. This is, we got all different ages, but it's not a bunch of kids. Buying and selling options on what's that platform? Robinhood. We're not doing that. We just got so much other opportunity and if you are doing it, great, have at it. If you are using Robinhood, have at it. Um, but we're not trading meme coins either. It's like, why? We don't need to. I think we'll leave that to Dave Portnoy. I'll be back a little later to answer any questions, but we'll let you watch. We'll see if we get a revisit overnight. I'll just mention to everybody, if you find these numbers too big, okay, please know, um, you can trade micros, which are 1/10 the size. So you don't have to trade that size. On the other hand, there may be folks that trade much bigger, right? I can't believe this guy's only doing this for like, for 12 grand. I mean, so it's scalable. I mean, if you have the experience, I hope, but if you have the wherewithal and you want to trade 10 of these things, or more, I mean, you certainly can do it. So what we teach is all scalable. So I do want everyone to know. Scotty asked the question about how did we come to the idea of Stock Market Caddy? Well, I'll tell you this. When we started in 2000, that was not the idea. Absolutely was not. The idea was to simply take control over our own financial lives and our investments because I got to a place where even though we had done very, very well, I had seen enough of the markets to come to my realization like that it was all a scam, total scam. They're doing so much bullshit and they still are. Different rules, different things. So, but and because when I said that to Susan, I said, Susie, the whole thing's a scam. It's a joke. And she's like, what are we going to do? I said, "Well, we're going to have to trade. Oh, okay, well, how are we going to do it? And so that's how that started. We didn't, the stock market caddy only came about in 2011, 2012, because we were bored. And one night Susan and I were watching on the big screen, the movie Bag of Ants. And there was a scene in Bag of Ants where the golfer is bent over and his hands are trembling and he's shaking and it's like a war zone and he's looking at the golf ball and you're not sure if he's going to hit the golf ball or run or he's fear of flight. And right in the middle of that movie, I just stopped the movie and I said, Susie, and she's like, oh, what now, Don? Yeah, can we just watch the movie? And I'm like, I wonder, Susan, if there are other people out there like us trying to trade the markets that, you know, because I remembered what it was like. There were times when, we couldn't tell up from down, down from up, absolutely. I mean, all this just didn't come out of, just pop up. There was a lot of angst and a lot of frustrations. And, a gentleman used that word today. I understand what that is. Um, but we had turned a corner. And so I said, I wonder if there are people out there that want to do what we're doing because we had turned it. So it's like, okay, well, and I said, if we, and I just had the idea. I said, I think I'd call it Stock Market Caddy from the movie Bag of Ants. And she's like, okay, well, just write it down and let's get back to watching the movie and we'll talk about it tomorrow. And that's what we did. So we talked about it the next day, Saturday. I said I had this idea and that's where it came from. And when we started kind of building it out, and I didn't know how to build a website, and it's pretty, that's actually not the original site. We're going to be redoing the sites and all that stuff too, um, but it was kind of a labor of love and what we wanted to do, and that's where it came from. Didn't know, had no idea if anybody was going to join. Didn't didn't know. We when we first put up the website, we would get the website on YouTube would get 300 or 400 visitors a month. Today, it's about 8 to 10,000, which is crazy for us. I'm not an Instagram model. 8 to 10,000 views. So and we have grown over the last 4 to 5 years. We're growing at a clip of about 50% a year. It's really remarkable. So we are going to be doing some things differently too in time, but it's also a controlled growth because we can't grow any faster than that. And so our annual memberships are limited every year because they have to be. And so, any case. That's where it came from. Scotty asked. That's kind of in a nutshell, and it's been great. It's been great. But the biggest thing is for us, and we have so many other things that are in beta, right? And there are things that, that I'm, you know, um, some of the videos show, but again, when you come in, if you sign up as a monthly and want to tell us a little bit about what you're most interested in, we're going to focus in on some of that and maybe set up some things for you to be able to see that day, if whatever your interest might be in. All right. So, in any case, enjoy. Pretty quiet evening here. Um, but the question is going to be, are we, and there's the C point down, isn't it? There he is. He just showed up, that little guy. See that? So the likelihood is we're going to drop at least one more. Now, I don't know if it's going to do it tonight or tomorrow, but one brick, but there he is. That's the C point down. So this is the A, it's the B, there's the C. You can do well, the machine can actually do this. The machine can actually count the number of bricks, count the retracement, and give us the extension and of what, we might be in for. But if we come down tomorrow, we take that out tomorrow, we could be down quite a bit. It looks good. It looks good to my eye. This is more for position, right? Not intraday. I should show everybody, if you like to trade point and figure in Rinkos, we have a tool. One of the biggest mistakes that people make is they don't size the bricks right. They size the bricks based on the amount of money they want to risk, and that's not right in our view. So I'm looking for it. Let me find it here. SMC. Um, let's see here. I think I'm sliding by it. Sorry. It's called the brick size calculator. And this tool calculates the brick size. Here it is, right here. So here's the ES. This tool is SMC for Stock Market Caddy, brick, box, or range bar dynamic calculator. So if you are trying to trade the ES on an intraday basis, it's suggesting that the brick size be $7.22. You can round it to seven, roughly $350 a brick. That's pretty big, but that's based on the algo. Now that can change. If that's too big, what people will do is they'll say, "Well, I don't want to risk that much money, so I'll cut it in half." And that's not a good idea because then it becomes too fast. What we would suggest you do is try to stay with this brick size and just reduce your leverage. Use micros and reduce your leverage. If this is the intraday, this is if you're a daily swing trader or if you're an investor. And so when you get down to something like, copper, or let's say oil, the suggested brick size intraday for oil is sometimes it's 10 cents. Right now, it's just a nickel or 6 cents. Sometimes it's 10 cents. So it's kind of come in. Um, again, how we're doing this. These types of tools hopefully make our trading and the trading of our members consistent. So as the market is fluctuating and doing whatever it's doing, these tools will make adjustments and tell us, how fast or how slow we should be running some things, right? And so we're not just winging it. Now, and again, we encourage, it's learn to trade your game, right? So we try to give you the coaching, the tools, the direction, and the guidance. And then, you're going to get to set these tools. You understand how they're used, how we use them, and you're free to use them in other ways because you can use Swing Machine to counter trade. I'm not going to show that right now, but takes a couple of days to give an orientation, a new person in Q School, an orientation on Swing Machine. During Q School, we will send it to them if they have TradeStation, and they'll have it on their desktop for the full, 3+ weeks, as we do other things as well. The but you can have, and I mean this so sincerely, you can have all the tools in the world, and if you're making decisions and if you are off of the money, it isn't going to matter. Because if you're making decisions on every single trade on the money, then you're trading fear and greed. And if you are, you're going to be in trouble. Pilots, I'm not a pilot, but they talk about, when a pilot is listening to his inner ear. Not supposed to listen to his inner ear. He's supposed to watch those controls. So JFK Jr., he had a very expensive airplane, high performance airplane, and had a whole lot of shit on it, and he didn't know how to use it. And he got himself, in a bad spot. And you can do that with trading. You can get vertigo. You won't be able to tell up from down, down from up. You get angry and get frustrated, and um, trading in the markets um, should be fun. It should be enjoyable. If it's a source of frustration, it's a source of anger, you might want to rethink what you're trying to do or what you've been doing, because it really it shouldn't be. It really shouldn't be. But you know, and there's all kinds of other, parallels to it. But that's why, again, the Q School is meant to, we're with folks, and we may have folks that are listening to us that are in Q School now or getting ready to go into Q School. We will, we've been through this. We think we know how to help a person, do this. And we're going to use the technology in a big way. And you just have to learn. That's it. So I'll let you watch. Any other questions, Scotty? Appreciate the questions. We have another gentleman. I don't think it's the same Scotty. I think he would have said hello. Who's an annual member, um, and he did exceptionally well and is doing well. Yeah, and when we have annual members too, like when they come through, though, um, I don't badger them, right? I'm not one of these folks that think that trading should be the, like, the end all be all. Family first, career. So I'm very I want everyone to do really well, but I won't intrude. I'm not going to be like calling people like, "How was your trading this week? How'd you do today?" However, if they hit a wall or they hit a slump, um, we're available. We can't maintain the Q School, but they know where to reach us. They can patch in. They got a live Zoom feed that's up all this. You're watching this on YouTube, but I have a live Zoom feed, and they can patch into the Zoom feed anytime they want, 24 hours a day, 5.5 days a week. And they can call, they can text. And I may not be able to get somebody out of a slump, but we can always give them maybe a different vantage point. There's so many different ways to approach this. And sometimes, certain markets, not specific markets, it could be the NASDAQ, but there could be at different times, different programs will run better than other programs. So you just, need to make an adjustment. Very much like a sporting event, very much like coaching a football team, right? And you may, the Super Bowl Super Bowl's coming up. Both teams are going to have an approach that they want to follow, and but they may have to make some adjustments, as the game gets underway, and where they are, and they most certainly will make adjustments. You're going to have to do that. I can't do that for you. Nobody can do that for you. You have to do it. Yeah. And the guy at Edward Jones, he's not equipped to do that for you. He's not going to do that. He's not equipped to do it. It's not what they do. They just take your money and throw it into an ETF or a bunch of ETFs, and they go to the mall. You know? So we're compressing the nightly video. It takes 10 or 15 minutes anyways for it to do that. This is a better view actually. If we take the VIX, and I'm going to put the VIX into a daily view. So here it is, right here, right? Let's put the ESH also on a daily, dead in the middle. Um, it was over here. It was very proportionate. It was very proportionate what it did today. Um, so it's turning down. We would expect the VIX to get up into here, but it's dead in the middle. Um, we don't like to initiate trades. I'm already on this trade as a general rule. What I was showing was when when the when the S&P futures contract is in here in euphoria and the VIX is in panic sell on a daily, what do we want to do? We want to sell. Now we want to look at a few other things like skew. We got other things we want to look at, but as a general rule, and they don't stay there on a daily. They don't stay there very long. I'm talking like a day or two. So when the S&P is in euphoria and the VIX is in panic sell, maybe for a day or two, it's a great time to come in with your options. When, just to reverse it, when we have the market in panic sell and we have the VIX in euphoria, what do we want to do? We want to close our shorts and we want to buy. just the opposite of what everyone will be doing. But it isn't enough just to be opposite what everyone else is doing because they could rip your head off, right? I mean, it's like a stampede, but you've got to get them, we got to get them at the extremes. And that's what we try to do right now, and so we're sitting on some nice profits here over the last couple weeks, but right now we're in the middle. And and it looks that way on the charts, probably on almost any chart you'd be looking at. If the if the VIX goes this way, we have we have an armadillo, and he's got a better schedule than the guys who do the grass. Like the guys that do the grass, they're supposed to come, like the same time every month or whatever. Um, this armadillo, he works at night, and he goes into our certain beds, and we can hear this dude. But it's not every night. It's like on, what are we, Monday night? It's usually Monday or Tuesday where he's got us on some sort of rotation or something. He's gonna slide by our house. And of course, the dogs and the cat pick him up and everything, but through the windows they can hear him. Any case, we're thinking, so Susan's like, what's going on? If the VIX goes this way, and they'll be buying the VIX, right? The VIX will be going this way. If it does, then the market will be going this way. And when we get down there, now I don't know where that's going to be. You can go look at a chart. It might be at 5,800. It might be at 5,500. Might be at 5,200, initially. And then when we get down in there, we're going to have to, the shorts that we put on when we were up in here, we're going to, ideally we'll have to, take them off, and then we'll be prepared to go the other way. And that'll happen, you know, um, and it doesn't happen every day, and it doesn't happen every week. Um, it'll happen so many times a year, depending upon what we're doing. And you can certainly change this, to even a weekly view, but this is a very simple way to know without even looking at a chart, like exactly where we are. We're right now, we're just kind of dead in the middle and a lot of noise, a lot of, did you see they had Tom Lee out? That stock pimp. He's a stock pimp. He's just hawking shit. Um, it's a buying opportunity. Oh, oh God, awful. I didn't see him on on the tube. I saw him on the Twitter sphere. I saw it come across. Another way of trading futures too, you don't always have to be trading. We have the Nasdaq here, which is, where it's a spot of interest, but you can also trade, the currencies. Let me just put the American dollar in here for a minute. I'm going to put it where silver is at DX. Now, this is going to happen to be a delayed quote um, on this particular account, but I'm going to put it on a daily, so it isn't going to make that big of a difference. All right. So this is going to be, I think, really, really interesting to you. How much capital does it take to take the American dollar overnight? Futures. Any idea? How much margin do you need? Anybody know? About 2,000 bucks. $2,000. So 84 days ago, 84 days ago at 5 p.m. on October 7th, before the election, you could have bought the American dollar contract at 102 for 2,000 bucks. You would have 6,500 in your account. The dollar's gone up in value 6.45%, but because it's leveraged, right, representing a much larger notional value, you'd be up almost threefold. Yet everybody is so excited about Bitcoin. Hmm. Cash. Now, what if we put in the euro? Why the euro? Because the euro and the dollar are two of the most major currencies in the world right now. So let's put the euro in. What do you think if the dollar is long, Scotty, what do you think the euro is going to be? If you got a long signal on the dollar, you might want to say, well, I wonder what Swing Machine's doing with the euro. So let's plug it in and let's put it on a daily, right? Compare the same time frame. Is that some shit? At exactly the same time. It says 84 days. That's probably over a weekend, so we missed it by a day. So I'm not sure why it shows still 84. I'll have to look at that, but it's virtually within, that must be a weekend where it logged it in. Now, the margin necessary to short a euro futures contract takes a little bit more. I think it's like 3,500, 3,800, somewhere around there. But so all total, you could have gone long the dollar, short the euro for about $5,000 84 days ago. And if you had done that, you'd have basically nine, about 15, a three bagger in cash without all the gyrations of Bitcoin and all the stress of that in cash. Then there is no reason to back off the dollar right now. Everyone got so bearish the dollar. Do you know where the dollar futures contract was when George W. Bush was president? George W. A buck 21. Buck 21. He's the one who really pushed that bitch down. He was shitty, folks. I'm sorry. He got us into a lot of shit. He did a lot of stuff wrong. He did. He really did. And I'm sorry to say I voted for him twice. But not saying the alternative would have been any better. When Obama, when Obama came in, this is after the crisis and everything, but you know where the dollar contract was? You know how low it got in his first term on a futures contract? 74 cents. 74 cents. So the dollar's been rising. Dollar's been rising. And with Trump right here, right now, I think it's going to continue to rise. Could it go back to a buck 20, a buck 21? It could. Might even go higher. Um, if the dollar strengthens, and the rates are higher, it's gonna quell the inflation domestically. And it could set up a situation where the markets correct hard over the next year or so, strong dollar. And then on that, when he's done and he's broken the back of some inflation, he's brought, he thinks, manufacturing back to the States. And then you know what he's going to do? He's going to water down the dollar. But that may be a couple years out. And what are you going to want to do? Short the dollar, buy the other currencies, get long the equities. That's the game. So you want to keep up, especially if you're in Europe and you're a member of ours and everything else. You want to, we love to this trade. This trade does this because if you get a signal on the dollar and the euro's not short, then you just wait and you wait for them to be a mirror image of each other and you trade it in a pair. We'll put it back to silver at SI. Silver on a daily went long 5 days ago, and this is oil at CL, and we're going to put them back to a 5 minute. So just imagine, you're coach of a football game, right? And or you're playing, on the golf course, and you're leading the field. You know, let's say you're playing golf and you're leading the field by 5 shots. Um, you may not, you may loosen up your game a little bit. You might loosen it up, and so we're well above our weekly plan for last week, this week again, and done it early in the week. So we're just kind of loosening it up. We're just kind of relaxed, and we're gonna just see if we can get ourselves in position for the bigger move. And we're gonna use our futures here. Um, if we hadn't hit our weekly goal, and we were only leading the field by a couple of shots, well, then we're going to be in there, actively trading and using the machine and getting the machine to do it as well. So little bit different, just because of the action that we've seen the last 2 weeks on that Sunday open to Monday. And we've been in position on both of them. And that's what we're trying to do. We're just trying to get ourselves in position so that we can get those positive outliers, not the negative outliers. We don't have negative outliers because we we guard against those, and we use the machine not to get them. Now, the other currency you don't want to lose sight over is also let me just punch it in here, is the yen at JY, the yen. And let me put it on a daily. Okay, so she's still short. We've been accumulating yen on a position basis um, underneath 65, which she still is. You may have heard of the yen or the carry trade, maybe not. The game that the hedge funds like to play, Mark Cuban people like to play it, and that is what they do, or what they've done is they go to Japan, basically the yen market. They short the yen. They short the yen. They take those profits and they deploy them for risk assets, namely the S&P and the Nasdaq. So they're short the yen, and they've been doing this now for years, right? Because the yen at one time was like at a buck 60, a buck 70. It was crazy. Um, and they shorted it all the way down, and then they deploy the risk assets. It's called the carry trade. It's pretty popular with them, and that's what they do. When when the yen um, starts to rise, now the yen hasn't risen because the government over there, they started quantitative easing back in 1990, 1991, and their bonds trade by appointment. I mean, they started this monetization of debt. There's a group of videos you want to watch called Princes of the Yen. Princes of the Yen. But there's some speculation, and I do subscribe to this, that maybe they're getting ready to unwind that. Now, there's been, you want to be careful with this because, there's been many a trader thought that was going to unwind, in the last 30 years, and it never did. But they're starting to raise their interest rates a little bit. If the yen should rally, I mean, even just back to 70, 75, I'm not talking going a buck 60, but just from where it is to 75 or to 80, something like that, that would trigger an unwind of the carry trade, because you can't have, you can't have the yen rising if you short the yen, because it'll chew up all your profits that you might be making in other markets, because by the time you get out of those and get back to the yen to cover the yen, you lose. And they're doing it with, with their American hedge funds. So they will so what would happen is would be the reverse of the carry trade. Now we had a glimpse of that back about a month or so ago. They got above 65 a little bit. I think it's going to happen. I do. I don't know if it's going to be the Bank of Japan's going to initiate. I don't know what's going to initiate it, but I think it's going to be one of the triggering events. So you do want to keep an eye on that yen, and especially if she gets above 65 cents and starts moving up. And it can become very disorderly, because it's like, they'll move big and they'll move fast. And by the way, they're awake right now, right? It's midnight here, pushing 11:38. They're up. I think they're just getting, they're getting going during the middle of their morning, right? They start getting up around what, around 6 or 7 o'clock p.m. here. Now, you take some of the other currencies around the world, they've really gotten hurt, right? The Aussie dollar used to be on a futures contract, used to be a buck. It's down to like 60 something. The Aussie dollar, the Canadian dollar used to be close to a buck. It's down to like, 69 cents. I wouldn't short them now. I wouldn't short the Canadian dollar down here. Mm-mm. Nope. Mm-mm. It'll rally. By the way, the new Secretary of Treasury, Bessent, he's a Forex trader. That's where he cut his teeth, and then stocks, and then futures and options. But he cut his teeth with Forex. So he understands currencies big time. So, I just share this with you too. I don't get super, no matter what I'm doing, I don't get super focused on any individual trade. I am aware of my account. That may sound a little, you know, um, maybe a little different to you. Um, I equate it to being out on the golf course. Wasn't that good of a golfer to be able to play professionally, obviously. But the golfers have been asked whether or not, they're thinking of the score. I tend to think that if I was a professional golfer, I wouldn't, when I'm hitting an individual shot, I wouldn't be thinking about my score. Mm-mm. No, it would be exhausting, wouldn't it? Like I gotta hit the shot so I can be one under. I mean, it would be, I would have to just be focused on the individual shot. However, I'm in a tournament or, I'm going to be playing 4 days, I am going to be aware of my overall score. Maybe when I finish the hole, maybe when I finish the first day, the second day, or at the turn, that sort of thing. Right now in that tournament, you got to be beating other people. Here, we don't have to beat anybody. We don't even have to beat the market. We just gotta play. We just gotta, we don't have to beat the market. That's the thing. It isn't about beating the market. It's just extracting cash flow. So this block of money that's here started on January 26th at 30,000. That block. It had a high watermark of 54,000. And that was struck, believe it or not, in the early hours of last Sunday, not this past Sunday, but the Sunday before. And then we finished the week last week at about 35 and some change. So, it was still a very good week, but well off of the highs of the account. Then we come in this week, same block of money starting at 35. And this morning, I think some of you saw it or last night, I forget now which, but we had a high watermark again of about 52. Once again, we didn't get to 54, 52, 53, thereabouts. And then, they rallied this morning. We had to clip them. We had to close that trade. That's the 12.735 that you see. And, the account's now at 42. Um, so we're in the thick of it, but our weekly plan was achieved last week. It's being achieved this week, and we're putting ourselves in position to, hopefully have a nice outlier on a weekly basis, right? I'd like to think that we could take the account up through that high watermark of 54 and maybe really take it up. And I'm not talking about adding any more leverage or anything to do that. I'm not. So, but am I thinking about it on every tick here? No. No. Mm-mm. No. We're compressing the nightly video, getting that out to everybody, and just relaxing. And we'll make sure we get all our mechanics and everything set up. So it's a golf game. It's flying a plane. It's whatever it is you like to do. And when something that you like to do and you do well, it's the same thing. Okay, not unusual at all. I swear, sometimes, you'll see a little acceleration after the East Coast part of the United States has been put to bed, and we'll see. And we're gonna let you watch. And now, of course, Europe will come online at about 2, 3 o'clock in the morning. Then the U.S. Treasury, the markets room, they wake up. The hedge funds go to work at about 4 a.m. Eastern Standard Time. We might want to keep, if you guys don't mind, I'm going to put this yen in here, down here at Ethereum. I'm going to put that in I think we should keep a tabs on the yen. Yeah, see, I have it down here actually. I'm going to put it here right now. Japanese, nope, Japanese yen. I got it in there twice, but there we go. If the yen should ever rally, I think, that could also, if it ever, shot up hard, that would be an indication that we're going to move also down. I think it is. I don't know if it's going to be tonight or not, but you can see the activity picking up. The trend is down. Somebody's playing. For me, again, not a pilot. I love listening to pilot podcasts, though. I love listening to pilots, and we got pilots. Um, I think if you're a pilot, I think you could, really, really like these tools. Um, but I was listening to the pilots, talk about, those night vision goggles and when they're looking at their instruments and then, they really focus on their instruments and then yes, they're looking out the windows and trying to see what they can see in all conditions. Um, right now, this is like our dashboard. We can look out the window, which would be at a chart. Could be point and figure, could be Rinko, could be line break, could be a tick chart, could be range bars, could be time, bars, could be any number of things. But this is a beautiful view. We are definitely getting some movement here. Nice, 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 nice. Right after midnight. East Coast is to bed. Now we take it away. If you took this trade initially at 825, we didn't, right? We've been in this trade all day. But if you took it at 825 tonight, you're up on the NQ, you're up 3,700 bucks. 4 grand. One mini. make decisions on the money. We just fly the plane. Okay, so for those that are still here, I want to take you back to the Renko chart, right? Okay, so do you remember the other night or the other day was track day, night? We were counting the number of bricks if you played with a 9 iron. Do you remember? And we counted off, I think, 22 of these. Every single one of them, you could have picked up a single brick, which would be $1,000 with a mini. Do you remember earlier tonight? Remember the C point? So let me just show you, right? Do you remember? We pointed it out. It happened to be real time. I mean, you were on delay, but um, this one right here, let me get another marker here, get a pen. This, this guy. Okay, he showed up right here when this brick right here opened, right? That's when he showed up. So right here, if you shorted right there, now you couldn't have done this on YouTube because you're on delay but and you played for one brick, would you have made your $1,000? Yep, another one. So there's another one. Now, what you have to do is, I mean, you don't want to be sitting here. I'll be sitting here, but I'm doing other things, right? So, but you don't want to be sitting and staring at a screen for the rest of your life. So we'll get it programmed. I mean, we've written the program, we've got the tools. All you have to do is just, get it sized properly and then have the alert sent to your phone. And or just have the machine put the trade in and hit the target. If you shorted here, though, you've got to be prepared to risk two bricks and a little bit. So in order to play, you got to be prepared to lose $2,100. But you get a lot of winners because we can't risk a negative outlier. We can't risk, going against you and getting, rip, having it, tear out 10 grand. We can't let that happen. But there's another one. And so what we think, you know, are we gonna come down and do this tonight? And we might be down here by the time the American public wake up physically. Mentally, I'm not so sure. We gotta have the country that's asleep. Deciding to wake up, deciding to catch on. Now, if you start making decisions on the money, well, we just, you're gonna struggle. You know, Eh, if you start flying that plane and you start reacting to your inner ear, you start getting fearful, you start getting greedy, or you start getting giddy, and you're flying a plane, or you get distracted, not going to be good. You join, most trade, and we don't run a trading room. This isn't a trade, we're just doing this as a free educational spot. We do this day in, day out, week in, week out, month in, month out, year in, year out. We're doing it all the time. And but we're not high-fiving each other. We're not, you know, woohoo, look at me, like we're at the roulette table at the Hard Rock Cafe. We're not doing that. This is business. Now, if you're an options trader, the options market, I don't think is open, right? I mean, they're talking about getting the options going 24 hours. They're going to need to, but they're not, options aren't open. Somebody's selling. It'll be on your desktop soon, so good to see you. Didn't know you were there, but we'll have it on your desktop real soon. Just point out, you can see the trailing stops right here, right here on the NQ. If you're watching the 5 minute, now it's doing just some machine stops being tripped off. We don't think it's much of anything, but that's what that is. You see it here first. The short is still in place from 825. At 1 a.m., folks, we're gonna have to say good night to everybody on YouTube. Our machines will stay open. They're smoking all night long. Uh, we trade not just one market, but multiple markets, multiple accounts, and they're whirring all night long, every week. So in advance, we'll say thank you for stopping by, Scotty. Thanks for the questions, and Sil, it was good to see you. He had to leave. Sil's going to be he's in Q school now, and about to start his one-on-one sessions shortly. And once again, Q School fills up weeks, months in advance. So if it's something you want to do, be sure to reach out in advance. Make sure there's a spot ready for you when you're ready to go. So I want to wish you the best. It's going to be a fun evening, and it should be a great day tomorrow.